Good afternoon, and thank you for joining us today. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities. Today's webinar features Excellon Resources. Excellon has entered into an agreement to acquire a 100% interest in the fully permitted past-producing Mallay silver lead zinc project in Peru, where production could potentially be restarted within 6 months of closing of the transaction. It also has a portfolio of gold, silver, and base metals assets, including Kilgore and advanced gold exploration in Idaho, in Silver City, a high-grade epithermal silver district in Saxony, Germany, with 750 years of mining history and little modern exploration. Today I have with me on the webinar Shawn Howarth, who's the President and Chief Executive Officer at Excellon Resources. The format of today's webinar will be comprised of two parts. In the first part, Shawn will provide an introduction to Excellon and outline what investors have to look forward to through the remainder of 2024 and into 2025. In the second part of the webinar, we'll take your questions live, so please send them in using the chat box and we'll get to as many as we can. I'll note that you can type your questions in at any point throughout the presentation. To start, we'll handle the disclosures and then I'll let Shawn take over. For Excellon Resources, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Excellon corporate presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Excellon-specific disclosures. So with that out of the way, I'll turn it over to Shawn to introduce you to the company and what you have to look forward to.
Yeah, thank you, Taylor, and thanks for everyone for joining. Great introduction and everyone that wants to listen. So for us, we'll focus mostly in this kind of webinar to start on the Mallay project. It is transformational by all accounts for Excellon. We're really excited. It's a near-term silver producing mine that we expect to be back in operation by middle of 2025. But really, that is only the beginning. The exploration potential near mine plus property-wide is tremendous and situated in a very prolific area of historical silver production. So a lot of the key pieces to a fantastic story. This presentation is uploaded to our website now, so it's slightly different than the corporate presentation. But as I walk through it, you'll be able to download it after the meeting and from our website as well, excellonresources.com. So quickly, we announced on October 31st a partnership with a group, Adar Mining, who are the debt holders related to the Mallay project or the Mallay property. Just to clarify, what we're doing is we're committing upfront $2.5 million in the form of cash and shares that would be paid on close of the transaction, as well as $6.5 million to restart the mine. There's no other consideration that is going out. There is some deferred consideration in the form of a royalty and a stream, which we'll talk about later on. But overall, the majority of the cash flows, once the mine is restarted, are accrued to Excellon. We expect it to be about a 3 to 4 month process to get through the restructuring. Adar Mining, who is the debt holder to Mallay right now, will act as a stalking horse bidder. So they will bid the value of their debt, which is around $25 million. And that will be their form, and they'll bid that for 100% equity in the mine. And immediately on close of that process, they will transfer all their rights to Excellon. So on close of the transaction, we own 100% of the property. That includes the Mallay mine and the Cerros project. We included in the transaction an option for the debt holders to purchase up to a 49% interest in Cerros. It's a back-in right. It's not a free carry. They will acquire that for basically 1.5 times historical expenditures. So they are paying cash for that interest. But I think there's two ways to read that transaction. Number one, they see the long-term potential of what this exploration project could really be. And number two, Excellon retains control. So we will be sole operator with 51% interest. And we bring in another partner that's willing to put more capital as we continue to develop that mine. I think for many reasons, this can be very accretive for Excellon shareholders and should be looked at as incredibly positive. So quickly, what do we want to accomplish? really two things. If I see a vision for where Excellon takes the Mallay property, number one, the mine itself. Obviously, restart. We want to be high-grade, multi-million ounce silver producer, back to silver production by middle of 2025. Those are timelines that are achievable, may view as aggressive, but we're leveraging on a tremendous amount of infrastructure at site, and we'll talk about that. At 2 million ounces per year and $17 per ounce cash cost, this is around where the historical trend was for the Mallay mine, adjusted for some inflationary factors for mining and for equipment. You're looking at around 10 to 15 million a year in free cash flow generated from this at 2 million ounces in current silver prices. The current mineral inventory is about 3 years. So the next step is really, and to restart the mine, let's step back, we'll invest $6.5 million. That's our commitment up front. We're sourcing that commitment, I say, from 2 or 3, typical sources. Number one, offtake prepayment structures. Look at, the ability to refinance this with a portion of prepayment. The concentrate products, the lead and the zinc, are desirable products and are highly marketable. So we're getting lots of interest from off-takers. Given the fact that for $6.5 million in initial capital, we're generating 10 to 15 million in free cash flow a year. There's obviously an accelerated payback period and tremendous amount of upside potential. So I think we should be comfortable that we can get this thing financed. And of course, equity is a key component to that as well, and something we're exploring. But I think the longer term, the upside will continue to be generated from exploration. Number one, the near mine exploration, we're committing to put around $2.5 to $5 million, I'd say over 12 to 18 months, to extend the Mallay mineralization. Historically, Buenaventura turned over around 3 years of mineral inventory when Buenaventura operated the asset. I think that's normal course for a large operator. For us, we'd like to show sightline at least 4 to 6 years worth of mineral inventory, and I think that's achievable. Current mineralized boundary is to about 300 meters below the current mining areas. So, and when we talk about, the upside in the continuity of these veins, and as they get deeper, the zones widen, I think there's a lot of opportunity to really, do a lot of work and probably even continue to refine and upgrade the underground potential of the mine. Historically was mined much more as a I'd say a high grade, low tonnage model. And then the third piece is over 3 years, we're going to invest $7.5 million in at Cerros, and the potential and the return there is the creation of a new standalone multi-million ounce epithermal gold silver project. I mean, that is the focus. The footprint is comparable to some other large bulk tonnage projects like Lagunas Norte, like Purina, that have all in excess of 10 million ounces of production historically. The difference here is this is still an undrilled, untested target. And so all of the greenfield, all the potential is going to be brought to Excellon through the drill bit and through continued investment and focus. And so we'll talk a little bit about that, but overall, commitments of capital over the next 3 years, you can see where the near term is clearly the news flow coming from restart of the mine, extension of the mineralization when you're producing, where you're going next in the mine, and better understanding grade contouring, particularly as you go deeper. There's tremendous return there. Every 200,000 tons that we add to the mine plan is about a year of production. Again, that's 10 to 15 million in free cash flow in US dollars. So tremendous amount of torque for drilling. And then of course the pure upside is the greenfields on Cerros. Okay, so why is that achievable? I mean, these are pretty aggressive goals. Can we achieve this? Where can we get this capital from? And ultimately, why can we execute? Number one, you're situated in a world-class silver belt in Peru. We'll talk about Peru. Tremendous endowment along the Andes, Peru, the Andes mineral belt. And you're leveraging turnkey infrastructure, so 50 kilometers of underground development, 600 ton per day mill that's operational, that Buenaventura invested 115 million US dollars into. So where we're restarting the mine is very much where development stopped in 2018, and we'll talk about that as well. The upside with Mallay is untested, continuing to drill below the 300 meters and then explore laterally. 3 kilometers to the west, there's targets, and 3 kilometers to the east of the main Isquiz vein system. There's tremendous potential as well. And then broader upside is Cerros, as we'll talk about. So just a quick overview here. I mean, why Peru? Number one, Peru is by all means a prolific zinc and silver exporting region. I don't think that's lost on anyone here. It's number 3 when it comes to global silver production, number 2 when it comes to global zinc production, and by reserves, the largest. That owes largely to the Central Andean metallogenic belt that it's situated on. If you look to the graph on the right, there's about 5.5 billion ounces extracted from this belt. In history, this is from Peru's website, their metallurgy and their Ministry of Mines. The Mallay property is the orange star you can see in the belt. It's just basically situated in the heart, just to the north of the Cerro de Pasco district, 350 million ounces of silver produced there. Undoubtedly a very prolific region. I think what's unique about the Mallay property, you have 2 styles of mineralization. You can see the Miocene skarns, the pinkish area is the typical of your replacement style deposits. You're thinking the silver, lead, zinc, typically you would also find in Mexico. But also the Tres Cerros is an epithermal project or epithermal deposit. That's what it's showing, indicating near surface. And so you're getting the benefits also of some of the largest bulk tonnage projects, Yanacocha, as I mentioned before, Lagunas Norte, and some of these others. So you've got this uniqueness that you're sitting on the same property with a tremendous amount of diversity in mineralization, and that's to the benefit of developing and exploration. So quickly, where we're at, within Mallay, it's an established mining region. Historically, it was a complex with Buenaventura. Mallay mine was operated from 2012 to 2018. And we'll talk a little bit about it, but typically the history is that it was independent. And then later in the years, the last couple of years before it was put on care and maintenance, mining activity from Uchichawa as well to the east. Some ore was blended through the mill, and I think that's indicative kind of how Buenaventura viewed the mine itself, viewed it as relatively small and viewed it as relatively a challenge, and we'll talk about why, and those are all the opportunities that we're unblocking with this transaction and our focus on restarting it. Churin is kind of the nearest town, located accessible by paved roads from Lima itself. There's supplies, workers, everyone. There's lots of access to local workforce, and I'd say the communities are all 100% supportive of the Mallay mine itself. The mine is fully permitted for restart and has agreements with 2 of the communities for restart, and we continue, or the mine continues to run right now in care and maintenance, ensuring safety standards and ESG that ensure that on restart there are no issues. So it's key. The focus has always been on bringing this mine back into restart, and Excellon's excited to be able to do that. And just to the bottom of this slide, it's worth mentioning now, I think in the news you might have read about it, the Chunque port, which is a $3.5 billion deep water port built by the Chinese in conjunction with Peru. Peru becomes the gateway of Latin America when it comes to the export of minerals and more broadly commodities through Latin America. So the infrastructure is there, the long-term view and the strategy by the government is there. I can't think of a better spot you'd want to be. When you think about other prolific regions, Mexico is large silver producing region, of course, as well. You have a changing government, shifting strategies. I think we know that well. Excellon has exited Mexico. We don't see the same challenges in Peru. By all means, it's a very mining supportive region. So just a brief history of the mine itself. Okay, so this was, production historically when, excuse me, when operated by Buenaventura, brought into production in 2012. I'd say on average around 1 million to 1.3 million ounces of silver and about 2 to 2.5 million ounces on an equivalent basis. That's including the zinc and the lead production. In aggregate, produced around 7.5 million ounces of silver and around 14 million ounces on an equivalent basis. 2016, if you look at the numbers, looked like a bit of an outlier. That's when 600 tons per day was hit consistently at the grades that are currently modeled in the reserve base. So I want to think about that because it's important. As the mine continued into 2017 and 2018, They encountered challenges with water. It's well, written in their MD&A. They talk about it, and they started to blend ore from other mines. They started to capitulate on the development at Mallay, and that really impacted the ore production that was coming from the mine. And they started to ship abroad, and by 2018, they shut it down. And in 2018, of course, silver prices were also $16 to $17 per ounce. So completely different environment then as they are now. And those behaviors and those decisions were impacted or were created due to the low silver price. There's no question. But when you look at the quality of the mill, what was built at 115 million, it is a gold standard when it comes to construction. The estimated replacement value to build something like this now is $150 million. There's no question. So direct power to site, 2 megawatt power backup system, transfer stations underground. So this is very much a turnkey restart story. Yeah, briefly, why now? What's different between Buenaventura and Excellon? As I mentioned, initial capital 115 million. So think about Buenaventura. They would have been amortizing capital over a restart plan. They had around 6 years worth of inventory resources when they decided to restart, and kind of continued forward trying to develop about 2 to 3 years ahead of plan on inventory. But typically we're trying to amortize these capital costs, and I would say what I would consider probably a large overhead on a corporate side, amortizing that through a high cost base at the Mallay mine as one of their assets. Excellon starting 6.5 million up to 8 million if you include the exploration dollars. Completely different capital base, there's no question. Silver price at $17 per ounce made no sense when I have high costs or a $14 to $15 per ounce cash cost producer. Of course, we're in a completely different silver price environment. Zinc is trending closer to $1.50. It's not going back to $1, which is where it would have been when Buenaventura was operating. So the commodity prices make sense. Buenaventura talked a lot about water ingress, limited development, production rates decline because they forced to move around how mine capital would be developed, specifically as they went deeper. Two things here. Number one, water is not an issue with this mine. I mean, Excellon just came through operating the Platosa mine, where water requirements and pumping infrastructure was about five times what the water ingress is at Mallay. So it really is not an issue. And most of the reserves right now are above where the water is in the mine. So you could, not saying you would do it, but in theory, you could be restarting this in much higher areas and come up with a water strategy later on. Of course, our focus is to get into the underground and start to understand a little bit better. And I think there's 2-3, real solutions on how you can manage the water itself. That will take technical work and studies, but, fundamentally, it's not an impact in the overall operability. There's no question. And then more broadly, the strategy for Buenaventura, this is a smallish asset in their portfolio. As I mentioned, they started to blend ore as you went further on into the mine life, capitulated their development and just choked off their production. For Excellon, this is an opportunity. You've got the right operating team. Paul Keller is a chief operating officer of Excellon. He has experience operating in Peru. The Peruvian team associated with the Mallay mine are fantastic. Live in Peru, have strong experience operating in there, and the relationships with the communities and the suppliers. So the right operational know-how to get this thing restarted is there. Just quickly, some snapshots of some pictures within the mine. The 6.5 million, most of that should go into the underground. I'd say around 2.5 to 3 million in US dollars. That's to get back in, prove mine access, get the ventilation running, energize, areas of the mine, start the dewatering deeper. I'll show a long section on the next page. It kind of talks about where's the access right now, where you're going to go. So focus more on the physical constructs. Most of the mining would be completed by a contract workforce, and the mill would be owner operated. About $1.5 million will go into the mill. A lot of that we say turnkey. It's operated or turned over once a month, but upgrading maintenance on the belt systems, realignment with the ball mill, critical spares and pumps, that type of material that you'll want to order and get it back up to running so it's on a consistent production basis. And in the overall site improvements, you can see that the overview, it's a fantastic operation, very much gravity fed as well. There's lots of opportunity to continue to expand. Some work was done to look at 1,000 tons per day. I don't think it makes sense to talk about expansion yet. Got to really understand what is deeper in the mine. How does the mineralization behaviors as you get deeper? We'll talk about that, because that's the opportunity, and that the underground is going to drive what the mill throughput is ultimately. So just a quick long section. So the pinkish areas, the darker it is, the higher grade it is. The existing reserves that are JORC compliant are kind of near surface. So we're looking at the 42 to the 4300 level. The access way is in through the 4090 level, which is, I'm going to open up my pointer here to see if you can see this. Let's try this here. So the 4090 level here, this is the access way in here. And typically, what Buenaventura do is be mining the nearest surface area as more replacement style deposit. So think about like highly structured, whether faulting or intrusives. The mineralization is well defined, albeit more narrow. So you're looking at 1.5 meter to 2 meter widths. As you get deeper in the mine, and you can start to see this, I'll clear this out. You can start to see the mineralization continues to get it gets wider, the zones get wider, it's more disseminated, it's more of a skarn style mineralization. Drilling has only been completed down to around 300 meters below, so you're looking at the dots here kind of intersect where a lot of the inferred mineralization is. And tremendous amount of infrastructure, and basically water started to flood the development drives, and Buenaventura said, okay, that's it. We're not going to bother doing more work, and we'll just kind of try to mine out some of the higher grade sections near the surface, and then that's it. Where we'd be restarting the mine is a lot of the remnant mining, so going back to the same areas that Buenaventura was operating in as well. And I think that's the opportunity, is that there's a lot more to do, but more of it's going to come from depth. Do these zones continue? What is the larger feeding system that's below this? Is it a skarn style? Is it a mantle style mineralization? These chimneys that are all joining, or these separate veinlets from a larger chimney system below? We don't know that yet, and that's the opportunity. What we know is that grade carries. So you see in a lot of deeper these skarn styles, you start to get predominantly zinc and less silver. Silver mineralization is still associated at depth, so we're not losing on silver. And I think if you get into these wider zones, you're going to look at, can you increase your throughput? Can you maximize for larger tonnages? And those are all the opportunities that we'll explore, but we'll start it with cash flow. We'll start it by operating near surface to the mine or higher in the areas in the mine. 4090 is the meters above sea level, so the levels kind of associate. You can kind of see the elevation you're at, which is typical though for Peru, and it's not too abnormal. So that is at a high level the Mallay mine, and I'll pause there. We'll ask questions about it later on, but let's quickly get into Cerros, because I think it's worth getting into some of the details and what we want to do with it. So we talk a little bit about the Peruvian Andes Belt. Look at Cerros as what we think could be another world-class epithermal gold silver deposit. This is based on surface sampling that's been completed, that's defined out a mineralized footprint of around 2.5 kilometers along a fault, up to 500 meters wide. About 360 or 340 samples have been taken. 20% of those returned over a gram per ton gold in the samples, and 20% of those also returned over an ounce per ton silver. So lots of high-grade potential. IP anomalies identify some type of, or IP work that was completed identified anomalies to the south in the deposit, the south end of the 2.5 kilometer strike. And so when we think about it on these large epithermal systems, size matters, and we'll compare it and we'll show why. But this belt is host to these large projects: Purina, Lagunas Norte, and of course Yanacocha, 30 million ounces plus production over 25 years. So where it is, I mean, it's within our property. This is just a zoom in. So the Mallay mine is starred there on the map, about 3.5 or 4.5, 4.5 kilometers to the northwest is the Cerros property. Work was done on this by Buenaventura geologists. That's been followed up with a little bit of work by the current owners of the mine as well. It's exciting, as I said, because there's tremendous amount of high-grade minerals that are there. The alteration and the epithermal indicators indicate a high presence of pathfinder elements. So you're looking at saying this is an epithermal system. And there's lots of geophysical anomalies that need to be followed up on that identify several drill targets. The next step, no doubt, is, well, number one, go back and resample and upgrade some of the work, revalidate some of the work. Some trenching, of course, would be important too, but then beyond that, it's drilling this out and starting to define the extent of the mineralization. And so where do we take it? I mean, these are lofty goals, but let's compare it for a second to Lagunas Norte, which produced in excess of 10 million ounces from 2005 to 2019, and was sold to Buru Metals after that for $300 million, developed by Barrick. The Purina mine was sold for $1 billion on 8 drill holes. I mean, and then from there, Barrick developed it into an 8 million ounce plus producer. All of them carry similar characteristics to Tres Cerros. So you're looking at similar geologic settling, high sulfidation epithermal systems. Alteration is all argillic alteration, some brecciated zones. You see the same type of structure and controls at Tres Cerros. And then you say, okay, well, what is the scale? Does Tres Cerros have that size? Lagunas Norte is about 3 kilometers by 700 meters. Purina higher grade, but slightly smaller footprint in the primary ore zone, and continued to extend out 900 by 300 meters. Tres Cerros, we say, is 2,500 meters by 500. It's well in the ballpark of the scale and the district potential, and that's what gets excited. Unquestionably, it will take a lot of drilling to drill this out. So we're not saying we're going to drill this tomorrow and we're going to create a multi-million ounce deposit, but you can see how this can unfold over the next 2 to 3 years. That's going to be incredibly, the potential is going to be there, and we're excited to be a part of it and to actually be partnering with the vendors of the asset right now, who would be putting the money in the back end, right, to be able to take a portion of the ownership. So on that, I mean, I'll just kind of reiterate again. I mean, Peru, if you don't own Peru in your portfolio, you should own some. Prolific mining region. We know Cerro de Pasco right now to the north. We know some of the other stories that have tremendous return potential, showing exciting opportunities. Minimal capital outlay, $6.5 million commitment to get the mine restarted, generating 10 to 15 million free cash flow when we restart this on a 3-year mine life. You have turnkey infrastructure that you're leveraging. That's why the minimal amount of capital up front. And Mallay mineralization, the key thing is moving from replacement style narrow vein mining to something much larger and broader, more disseminated. The opportunity that can bring along with not only mineralization at depth, but in wider zones, more tonnage. That's exciting for us. And then of course, Tres Cerros is all the upside, untested 2.5 by 500 meter surface expression. That could be multi-million ounce potential. So you can see there's no shortage of it. I think the near-term news flow, no doubt, comes from the restart of the mine. As I mentioned, it's going to take about 14 weeks to get through this restructuring the acquisition process. So that brings us into middle of February into March. First steps, of course, is part of the transaction. We're going to go and arrange or secure the capital for the restart. So we're coming out of this immediately looking to restart the mine. That's step one. Get back into the underground. Most of the drilling we'd be doing for extension and upgrade of inferred resource drilling at the Mallay mine will be done from the underground. So it's key to get in first, open up the underground, and start focusing on where the drill targets will be. And then a lot of the news flow will come from, number one, turning on the mine, but then also from the extension and kind of targeting the next zones of mineralization. And then I'd say a year from now, be looking at what are the next steps with Tres Cerros as well, as far as it comes to more surface exploration and then ultimately drilling as well. So I'll leave it at that. There's a high level, and now happy to kind of drill down in any questions that come up.
Perfect. Thank you very much, Shawn. Great presentation. So now we'll turn to the Q&A portion of the webinar. Just a reminder to everybody on the line that you can type your questions into the chat box at any time. So we have a question here that came in about financing, just kind of what types you might be considering: equity, debt, royalty, JV, offtake for down the road. I know you outlined what's been as part of this transaction, but what other types of financing could be on the table?
Okay, I think probably the primary is offtake strategic investment that can come from someone that wants our concentrate product, so that's tied to concentrate terms. It's worth mentioning right now, actually, this is one of the best markets, tightest markets we've seen for zinc concentrate in years. You're looking at 0 to negative TC charges right now. So there's a tremendous demand for zinc product. And I carry that over to the lead as well. In our lead, we do have an antimony credit that we can get. Historically, wasn't recovered in Buenaventura, but that's significant, value potential as well. So we're going to continue to try to find other ways and creative ways to improve the product of what we're selling, thereby getting more value. I'd say as well, I probably would hold off on any type of royalties. Right now, there's about a 3% NSR that will be on this asset that's, that we can repay a 0.5%. So let's say 2.5% kind of in a long term. So my focus really isn't as much on the royalty side. It's probably more on the debt side and then also equity. I think it's harmonious to empirically think about this as let's raise the money for the mine restart, through debt that's achievable. Number one, that's not going to hamstring the project, and get some equity for the upside on the exploration, the extension of the Mallay veins, as well as far as exploring on Cerros as well. It wouldn't make sense to take on over-lever this for exploration. That never works. So focus on, maybe there have to be some equity as well. But I think, there's a lot of options around that. And it's simply because we don't have to spend a tremendous amount of money. There's other things we're looking at. It's soon to talk about, but there's a $5.5 million in environmental bonding that's tied to the asset with cash. Is there a way to get some value to that? Someone secure against that, and we've had some creative discussions. So I think something exciting will come.
Perfect. Okay. So I know as part of the presentation, you talked about the mine being permitted, fully permitted for restart. Just wondering how community relations are, consultations, etc. How does that side of things look?
Yeah. So the mine is associated with 2 communities that are associated with the mine. They're fully supportive, and the mine is permitted for a restart and tailings deposition hard stop. There's around 2 to 3 years worth of tailings capacity right now. The reason why the mine is in such good standing off of care maintenance is because the water treatment plant has been operated 24/7. So any drainage from the mine is getting treated. There is no environmental concerns right now. Cerros, there's a third community. There's the same 2 communities plus a third community that are associated with the Cerros area. So an agreement needs to come into place with them. That's something that we'll start to discuss, and that kind of is a dictator on how quickly or how long it would take to get to drilling. But we think probably 6 months to a year discussions with them to get them on site and start drilling at Cerros.
Perfect. Okay. Turning back to Mallay, just a question about how conservative is your 6-month timeline to get into production? Does that include a buffer?
Yeah, I think it's realistic. So why is that? The biggest challenge this operation will have on a restart is not the mill. So 50% of the problem is relatively solved. There's no long lead items. Typically, if you're constructing the mill, there's long lead items. There's the filter presses. There's large equipment, the ball mills, and that adds an impact on the design. It's related to the mine. I think 3 to 6 months, 3 months is probably aggressive, and 6 months is realistic, and that's why we're going out there. We've seen restart plans that say you can be back into the ore body within 3 months. I say that because there's 50 kilometers of existing infrastructure that's there right now, and a lot of the initial mining is coming from areas where Buenaventura was already at the face. So we're not developing another 500 meters to the north or to the south. You're already there in the mined areas. The challenges that we'll have, and we don't know all of this yet, is really, are those areas collapse? Is there challenges? Are we, ventilation? Is there issues that we're going to have with getting the infrastructure in place? And we'll start working on that sequencing and have, more of an update. I think it's premature to come out now, but the work that we've seen and the designs, and I'm talking about an operating team that was there when Buenaventura was operating the asset, put together the restart plan, or what they think is a proposed restart plan, and I think it's quite realistic, based on discussions they'd had with our chief operating officer as well.
Okay. Just wondering, in terms of drilling at Mallay, there's the 1,000 meters or so you mentioned for the resource to get that in the books. Just going forward, though, you meant I guess, what's the strategy? Is it going to be just to keep the mine life going, or do you want to get a larger mine life?
I mean, my view is we should have a buffer. I think 3 years is realistic when you're kind of at a steady state. I think that's why Buenaventura operated that way, and also they're a multi-asset large company. When you're an individual, an independent, I'd say you probably want to show some longer term. Doesn't all have to be in proven reserves. I mean, the thing is here, we don't have to prove up the reserves to pay back the mine capital. I mean, that's all going to be paid back within the first 2 years. So we don't have to have a massive, but we should have a sight line for the market on where we go next. If I recall, I think Buenaventura historically did around 8,000 to 10,000 meters of drilling every year to kind of continue to carry forward. But they also did a lot of mine capital. So they would do a lot of drifting and a lot of development because, if you think back to their focus was much more this structure, this controlled mineralization. And a lot of it is, you're drilling in the dark without having a clear understanding. And when you're in the mine, so they've spent a lot more money on the mine capital as well. As we go deeper, I think there's a lot more drilling you're going to do because you're into the zones or into the wider zones. And ultimately it dictates by what that style of mineralization. If it's more of a skarn style mineralization, you don't have to develop into it right away to understand the exploration of the characteristics of the rock. I don't think as much as well. So as we drill out, we'll tailor it a little more. So we're kind of giving that high level of $1.5 to $2.5 million. But of course, if you get into some really favorable zones, you're gonna adjust your costs and your exploration accordingly.
Great. Okay. So this presentation was obviously focused on Peru and what's exciting there. Don't need to dive into the details on the other assets, but maybe for those people that are familiar, just how do they fit into your strategy going forward now?
Yeah, so Kilgore is still critical. The exploration thesis at Kilgore, it's another epithermal deposit. It's about 1 million ounces, and by comparison, I talk about a 2.5 kilometer strike here at Cerros. Kilgore is around 800 meter strike, so it's about a little under half the size, and there's 1 million ounces there. The opportunity for Kilgore is we want to look along the sedimentary package, kind of in the contact at depth. So we're talking about deeper drilling. We think there's high grade potential there. The drill season is now closed, so the focus would be for Kilgore is ramping up for next season. That would start around June. And when it comes to Silver City, more broadly, we've talked about a spin out, into a European-focused silver vehicle. Still think that probably makes the most sense, but that's got to be market context, market dependent, and I don't think we're there yet. So we continue to hold that. The benefit of that is that there's low holding costs for us. We're fully permitted to continue exploration. But where we drilled out for, like I'd say, to define what the potential of mineralization there is, now we really focus more on saying, can you target specific structures and drill out on a certain vein to find mineralization? I don't think it's this more broad, widely disseminated drilling that we're talking about with opportunities like Cerros or somewhat a hybrid, which is Kilgore. So.
Perfect. Okay. We've had a question come in here, going back to Maya here, just in terms of the mill, what is the expected capacity upon operational restart?
Thank you. Should have mentioned that 600 tons per day is the rated capacity for the mill. That took Buenaventura, they averaged around 500 tons per day. So they didn't really hit the run rate. And if I won't bring it up now, but on that slide, one of the initial historical production slide, 2016, they hit 600 tons per day consistently. I think most of that was driven largely from the underground. It wasn't a constraint at the mill. So our focus is to get back in and develop, and that will define ultimately how much ore we bring to surface is how much we're going to be putting through the mill.
Perfect. Okay. I don't see any other questions that have come in. So maybe I'll just give you a chance to kind of give your last pitch to investors, or top 3 reasons people should buy the stock, upcoming catalysts, whatever you want to pitch. And then I'll do a last call for questions right now, and hopefully we might have some come in while you wrap up.
Thanks. Yeah. So for anyone looking for near-term silver production opportunity, I can't think of any better scenario. We're in a prolific mineral belt in Peru. $6.5 million is going into the ground. It's not going to pay the acquisition cost. We are fully funded for the acquisition now. So, and we'll be producing high-grade silver by mid-2025 with a free exploration upside that's all defined on the potential of Tres Cerros and the extension of the Mallay veins. I think that's at a high level, that's it. And we have the operating experience to do this. We've operated mines like this in Mexico for a number of years, and our chief operating officer has a tremendous Peruvian experience as well. Paul Keller, previously at the Santander mine, which is just to the southeast of us as well. So.
Excellent. So I don't see any other questions that have come in, so I think we'll leave it there for today. So I would like to thank Shawn from Excellon Resources for taking the time to host the webinar today with Red Cloud Securities, and thank you to everybody on the line for tuning in with us.